Now that 2018 is gone and 2019 has begun, we can continue with the unprecedented times. Auto occurrences are happening every day. Banks are failing. Stocks have fallen. The public is simply unaware. 2008 is too far away to remember for most people, and so they are doomed to repeat the mistakes of history. Sadly, this trend will continue. You came here for the truth, so let me unveil that for you. Today, we are going to look at what's happening in the stock market. We're going to talk about Hong Kong. We're going to talk about China. We're going to talk about Apple and Berkshire Hathaway and the risks that are present in 2019. So let's get into it right away. You're looking at the markets. I want to focus on the top three on the right hand side, which is basically the S&P, Nasdaq, and the Dow Jones, all just barely making its way into the positive territory today. There was a struggle back and forth, and there has been a lot of talk, of course, what's happening with the trade issues right now. So we'll stay tuned over the next few days and see what happens. We're going to look at the government shutdown, see how they proceed there. These are important factors to determine what's going to happen in the short term for the stock market. Hong Kong shares had their worst start to a year since 1995 as further signs of a slowing Chinese economy spurred declines. The Hang Seng Index closed down 2.8%. That's its biggest loss since October 23rd. The rough start came off the back of a 14% loss for this index in 2018. Look at the other indexes as you see the Shanghai Composite as an example falling 25%, 30%. It was a mess from its peak, and we are looking at right now the spread or ripple effect that has taken place. So let's move on. This is really what I wanted to cover today. It's so important. Percentage of stocks down 50% or more in the MSCI World, Europe, the S&P 500, and the S&P 1500. Wherever you look at this, it seems to be that things are terrible. When I address stocks, I'm not necessarily focusing on the US. I'm talking about the global stock market, and it has gotten to the level of being extremely bad today. Nobody wants to talk about it in the mainstream media simply because that's not good for their advertising dollars, and that's the big issue. Well, you can see it for yourself right here. The last time we were at this level was back in 2015, and of course, we also saw this during the financial crisis to a much greater degree. It's important to look at this factor as well as how many stocks are at their 52-week low. That is another important indicator to tell us where we are at today. Apple slashed its quarterly revenue forecast for the first time in more than 15 years, an unprecedented move in the Tim Cook era that was prompted by a downturn in sales of iPhones in China. This is his actual quote down here. Lower than anticipated iPhone revenue primarily in Greater China accounts for all of our revenue shortfall. He's basically saying it's just this, it's contained. Reminds me of 2007. It's only subprime, don't worry about it. But anyway, we'll see what happens with Apple at this time. They need to come up with something much better in 2019 or this will fall even further. Their iPhone sales did not do well this time around, and it's continuing. Of course, it's only getting worse. When you're selling a $1,500 phone, it's not exactly something that will get attention from a large number of people as they were used to when they were priced $1,000 or sub $1,000. So let's move on to the next one. Apple's drop cost Warren Buffett about $2.8 billion, adding to the struggles for Berkshire's portfolio. Unbelievable, but this is the way it goes. Berkshire owns a lot of Apple. In fact, it makes up 21% of their portfolio. So when the stock comes down, it's obviously going to have a big impact on the Berkshire portfolio. You can see their stock as a result and what happens with it. Shares of Apple tanked Wednesday in after-hours trading following the company's announcement that it was lowering its Q1 guidance. With Apple's more than 7% drop in share prices, Buffett's Berkshire Hathaway could be down about $2.8 billion. So this is why it's very important to diversify diversify, right? That's the way things should be done. You should have a lot of different stocks in your stock portfolio. If you have, let's say, precious metals, you shouldn't just have one type of precious metal. You want to have many types. And this goes for any type of asset. You want the maximum amount of diversification. Why? Not because you'll get the best performance, but you have the most sound investment strategy. In some very unusual news that reminds me a lot of what the little munchkin did, well, let me just read it for you. U.S. banks well positioned for adverse market conditions, according to the OCC spokesman. Now, this is strange. Why does this even need to be mentioned? You would think that this would be the case. Of course, they're able to withstand any sort of crisis. That's what they're supposed to do. Why do you have to come out and actually say it? Why do you have to do what the munchkin did and make a whole bunch of phone calls and ask, is everything okay? You'll be good if everything starts falling down. We're not going to have another financial crisis, are we? Oh, okay, everything's great. Thank you very much. That kind of seems a little bit sketchy. It actually makes me question it even further. The U.S. banking system has strong capital and liquidity, and it's well positioned to manage more adverse market conditions. Well, that's the lie that they're telling us today, so we need to be worried simply because they mentioned it. Apparently, the banking regulator was monitoring the effects of falling stock markets on the nearly 1,300 institutions it oversees and would share any relevant systemic information with fellow supervisors through the appropriate interagency forums. A whole bunch of jargon for, don't worry about it, we're taking care of you. And that is usually when you have to run for the exits. It's funny though, people on the inside, they believe these regulators are actually there to protect them. I had an interesting interaction with the SVP of a major financial institution, and he was talking about the Basel regulations, or should I say recommendations, and how important they were. What's funny about this is that I said, that's not important at all. And he laughed at me. He laughed at me because in his mind, he was thinking, this guy is ridiculous. But the truth of the matter is that I laughed right back into his face because they are a joke. All of these regulators, all of these institutions that have been set up to supposedly protect us are really there to protect the major corporations and all of the elite. Not us. That's a joke. We've seen all of the different yield curve inversions taking place. Take a look at this. Flattening yield curves suggest higher volatility throughout 2021. You're seeing the 2 and 10 year spread, and it's just interesting to see how this is played out over the years compared to the VIX index. That could mean that we will encounter some further volatility, but with the Fed having their short position on the VIX, I'm not trusting it at all. Emerging markets remain at greatest risk from hawkish U.S. monetary surprises. And by surprises, they mean hikes. The impact of a 100 basis point Fed shock. Well, this just shows us, you can see on the sides, the basis points there, and the countries are listed below. USA appears to be at about 60 or 70 basis points. And you're looking at areas like Russia, Turkey, South Africa being much more affected by what will happen. And we knew that already because even the central bankers in emerging markets came out and begged the Federal Reserve to stop hiking rates. And that was earlier on in 2018. Now we have this information showing us the impact. And of course, it's going to be a very, very negative factor for these economies. And I want to finish off with this. Take a look at this article. When it gets more expensive to borrow, marginal projects don't get funded, and what happens at the margin has a much larger impact on the economy than most people understand. I expect the combination of higher rates, uncertainty in Washington, and storm clouds globally will cause business leaders in the US to become more cautious on hiring and investment. Consumers will make essentially the same calculations, and that will lead to a weaker economy in the US in 2019. This is very important, and I do agree with what he is saying here. This is very important to understand the data that underlies all of this. You can't just read quotes. That's why I'm always showing you the actual indicators themselves, so it's not just me talking up here. I can do videos where I take really generic opinions and maybe some loosely connected facts and present to you 10 minutes a day of information that you may or may not find useful. Or I can give you all the data and you can do what you want with it. I research basically all day long on different topics. I present to you what I have here, and I hope that you find it informative so that you can do what you need to, whether that's investing or maybe that's saving, or maybe that is becoming very cautious and you're looking for that safe haven. Well, I'm just trying to present information, that's all. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. If you subscribe to the channel, you're going to be one of those people who are here before we get to 170,000 subscribers. We're just about to hit that point, so definitely hit that subscribe button and we can go over the top on that. I'm hoping to get to 200,000 subscribers, and I want to say hello to each and every one of you. So I'm really grateful to have all of you here from around the world. This is the most informative show you're going to find, all right? There's just so much data in such a short period of time. I'll stop ranting so I don't waste any of your time. Let's get on with this. If you found the video informative, I know you're going to find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually take a look at these books, flip through the pages for yourself at the link in the description below. If you're more interested in the audiobook version, you can get that at themoneygps.com.